the HDFC Bank issue that happened yesterday, right? Nitin Aggarwal, Senior Group Vice President, Head BFSI Institutional Equities at Motilal Oswal Financial Services is with us. Nitin, hi, good morning and thanks a lot for joining in. First, I want your thoughts on HDFC Bank because, it fell 4% yesterday. Of course, there are concerns about the merger, but I understand that these are transient issues that would happen, had such a big merger taken place. So do you think for a long-term investor, one should not be too perturbed? Or would you be cautious now on HDFC Bank?
Yeah, hi, good morning, Sonia. So yes, HDFC Bank, what the investors are getting to know now is the baseline and what the management therefore talked about as to how the numbers will look like, especially in context to margins, net worth, and that baseline has receded a bit versus what we thought it out to be, and which has led to the downgrade across the street in terms of the numbers. But we cannot really question the investment thesis in the stock for a long-term investor particularly, because we are still getting the visibility of the bank reaching up to 2% ROA by FY26. So it's going to be a gradual improvement in earnings, and probably 2Q now will be a weak quarter to start on the merged entity. But thereafter, as the liquidity gets deployed, the business growth will be one big monitorable over the coming quarters. As the execution therefore remains on track in the coming quarters, you can see the stock delivering at least returns in line with the ROE to begin with, and see some re-rating thereafter. But the next 3-4 months, the stock I think can remain in a range till the time you get clarity on that and the execution picks up.
All right. Hi, Nitin. Good morning. Nigel on this side. Nitin, we have seen HDFC Bank traded far higher multiples on a price-to-book basis. I think currently it's at around 2.6, 2.7 odd. In the past, where has it bottomed out? I mean, at what level has it bottomed out in the past? Because 2.6 times for a size of the bank like this is fairly attractive, right?
Yeah, I agree with Nigel. And if you look back, if you look at the forward multiple, the stock is somewhere around 2.1 times price to book on March 25. I'm talking about, and which is very close to the bottom valuations, barring the COVID lows. And otherwise, if you look back last 10-15 year history, the bank is pretty much close to that, and which is why we feel like that with a visibility of 2% ROA and 16-17 ROE that you will likely be at by FY25 and 26, we should not see any big derating in the stock. But after this merger now, and with the entity becoming much larger in size, the execution on the business growth front is going to be very critical, and wherein the deposits is going to be the first key metric that investors will be watching out, because we had a very strong run in 4Q, and then 1Q was a slightly softer quarter. And going forward, while the competition will remain very tight, but the performance of the bank on deposits and thereafter even the advances, because you are right now talking both on the core basis growth and the merged entity growth, I think that has to sometime go away as you progress in the coming quarters. And the merged entity will be looked at as to how it is doing in terms of growth, and thereafter the margin. So all these key metrics will be important to look at. And as they deliver on the expected lines, you can expect the stock to re-rate. But in terms of absolute downside, I think that will still be limited when you look at it on a 6-month basis, barring this now the negativity that has come in post the recent disclosures.
So absolute downside limited, but absolute upside also. I mean, it'll take time, basically, right? That's what you're saying. It's not going to happen immediately. Just a quick word, since we have you this morning, and we're just coming off the back of this Fed meeting overnight. And the message seems to be, rates perhaps will be higher for longer. What is the impact on cost of funding according to you here in the Indian scenario? Because what happens in the US will have an impact on what the RBI will also do. In that sense, should we expect some more NIM compression across the board for the rest of the year, FY24? What are you building in? Not for HDFC Bank, but for stocks under your coverage.
Yeah, sure. So I think we are not looking at any more rate hike as of now from RBI. And while the rates may remain elevated, so the turn in the rate cycle may get deferred a bit, and which is where the deposit rates and the cost therefore may continue to move up, and probably it may take one more quarter before we see a turn in the funding cost. And therein, I think private banks, therefore, especially the larger ones, will continue to see a compression in margins over 2Q and 3Q, and possibly by 4Q you will see some stability in margins coming through. But then thereafter it will again be a function of as to how quickly RBI acts on the rate cycle. if the rate cut happens for any reason to be faster than what market is thinking right now, then there could again be a compression in margins in FY25 again, which we are watchful of. PSUs in this regard may do slightly better because they have a larger proportion of MCLR book, and therefore the funding cost may peak out by 3Q, and given that alongside you will also benefit from the MCLR repricing, and therefore the NIMs can actually do better by 4Q for them.
One follow-up, you said HDFC Bank is trading at 2.1 times price to book currently, right? Which is the lower end of the historic valuations. Is that correct?
Yeah, on adjusted basis, adjusted for SOTPs.
Okay. And so from a long-term standpoint, if you had to give us your pecking order, right, in the private sector banks, what would it look like? Would HDFC Bank top the list? And what next? I mean, between both private and PSU.
So we from within the private banks, we have been pushing for ICICI Bank and IndusInd Bank as the two top ideas in the sector. And while HDFC Bank also looks good to us, but it's just that for the next 1 quarter, it may take a breather, and you will want to watch out as to how things progress, because this entire liquidity built-up that happened at HDFC Limited was towards the end of the quarter. And you will want to see as to how quickly it can get deployed. Though there are some positivities in terms of the rollback of ICRR that will help margins to some extent, and also the deployment that will happen. But alongside, because you will also be looking to raise more and more term deposits. So the funding cost, therefore, the benefit that one was looking at in terms of the repricing of borrowings from HDFC Limited down to HDFC Bank cost is not going to happen anytime soon. And which is where the margin improvement will take a lot of time to come back to where it was pre-merger. But from the operating performance overall, now that you have already formed a bottom close to that in the second quarter, I think things will only move up gradually. Which is where the re-rating probably will happen in 12 to 18 months.
Nitin, on an absolute return basis, what are your top ideas across your coverage universe? Top 3 ideas?
So, see, within private, we will say ICICI Bank and IndusInd Bank, these two ideas. And within PSUs, we like SBI, Bob and Canara. So between these three, depending on as to what and how much down the curve you want to go in the PSU bank, we can look at alpha idea. I think only from alpha angle, probably Canara Bank looks relatively cheaper because there has been a good momentum in the PSU bank, and we did one report on them a couple of quarters back. And from a time wherein one was not very sure of these banks' ability to sustain 1% ROA, today many of them are looking to beat that number in the FY24 itself. And which is where I think the re-rating in these banks will continue, and Canara being cheaper looks to be a good bet in the PSU bank.
All right, Nitin, thanks so much for stopping by and giving us your views on the PSU banking space. Canara Bank is looking up. HDFC Bank, well, at around 2.1 times odd. That seems to be a bit of a bottom in terms of a price to book multiple. Appreciate you joining in, Nitin, and giving us your view. But it's